Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video for Monday, October 4th. It's only a few minutes after market close, 4:04 p.m. Eastern time to be exact, here in Jacksonville, Florida. And today we're going to look at some of the former leading growth stocks and some of the last men standing, aka some of those names I've been covering in the last few videos that are beginning to slice through key moving averages, aka continuing to crack as the selling continues. Additionally, we've got a really interesting divergence I want you guys to see and be aware of. But before we get into that, as well as the charts per usual, let's talk about what just happened. Selling continues, growth hit the hardest. You can see that evidenced by the G5 index performance there, down 2.55%, the S&P down 1.3, Qs down a little over 2, Dow down a little under 1. Mid caps and small caps held up much better today, primarily due to strength again in oils and banks. So mid caps down 0.61, Russell down a little over 1%. Market state has now been adjusted to correction. We're not too far off from a 10% pullback on the Qs. Not that correction has to mean down 10%, but the action is certainly that of a lack of buying and increased selling today. Further confirmation in that regard. The trend gauge has no changes at the time being. We'll talk about that a little bit more as I get into the charts, but market leaders remains neutral, some still acting okay, a lot beginning to start to break down. So that could be subject to change very quickly. Short term remains the same. We're not back above any 21 EMA moving averages on the indices. Midterm also stays the same. That's what we're going to talk about a little bit more when we look at a couple of different areas of the market, and then long term also stays the same. Really, small caps are the only one below the 200, and they're more or less right on it. So we'll get into that here in just a second. Before I get into the charts, as I do in every video, let me reference the team here at Revere. This is me in the middle. If you have any questions about anything I say or cover, any stock, any sector or ETF, whatever the case may be, please send me an email. I'd be happy to answer your questions. You can also email me if you're interested in our strategy, what we do. You can email me, you can email Dan, Tim, Merrill, Alex, or Don at revereasset.com as well. So let's get into the charts. We're going to start here with the S&P, and you can see this is not able to get above this declining 8. It's a recurring theme, not only on a lot of growth stocks or stocks in general, but the Qs in the S&P, it's pretty apparent as well. So a pretty poor finish to the day. You can see closing towards the bottom of the range here on the S&P. Now only about 4% from the 200. The 150-day simple moving average is right around 424-ish, so only about 1% down to get to that. I do not have that on the screen at the moment, however. So I've got the 21 is the green line, the 50 is the orange. The pink line you see here, that is the 8-day exponential, and the black is the 200-day. So we're going to go to the Qs next, and a pretty similar story, just pretty clear downtrend here. We held up kind of right around this previous low from 719 today, this 352-ish area. I guess we went all the way to 350. However, the Qs certainly the weakest today as growth was hit the hardest, particularly two sectors we're going to look at here in just a second, but the Qs now only similarly about 4% from the 200-day. We really haven't been that close since really here, and even at this point, we are closer now than we were at this point here back in May. So once again, at the bottom of the range, not great action for the Qs today by any means. IWM, however, acting a little bit better, much closer to all the moving averages. As you can see, it's more or less right on the 200-day, give or take, just a little bit above or below. And similar story with the 50 and 21, not very far from it. But as I say oftentimes, and I meant to say this on the Qs and the S&P, but it goes without saying, the lows of today and the lows of Friday become important. So IWM has not undercut the lows of Friday. However, as we just looked at QQQ and SPY, they have. So the lows of today become very important for the Qs, for the S&P, and the lows of Friday are very important for IWM small caps here, and then mid caps as well. Once again, did not break Friday's low like the Qs and the S&P. And then lastly, the Dow same kind of story. Did not break Friday's lows. That's something you're going to want to watch on small caps, mid caps, and the Dow. Watch Friday's lows. Excuse me. On the Qs and the S&P, watch today's lows as an important downside metric to watch, their level to watch. Excuse me. So let's go ahead and get into some of these charts. I'm going to get to this, the divergence I want to show you guys here in just a second. We're going to look at some comparisons of small cap value, mid cap value compared to small cap growth. But before we do that, let's look at some of these leading stocks that I mentioned are kind of starting to crack. And I know a lot of leading stocks have already done that, but these were some of the ones that were holding up, swimming against the current, if you will. So we'll start with PANW, and nothing particularly wrong here, but what we want to take notice of is this is the first time we've sliced through the 21 EMA since the gap. So you can see it almost closed above it, more or less closed right on it. But the important thing we want to take note of is this is one of the stocks that was holding up the best, now slicing through the 21 EMA for the first time. And on a lot of these individual stocks, today's lows once again become very important. So PANW, one of the last leaders standing that sliced through the 21 today. Affirm, another one, has not touched the 21 since this first gap. Today it slices through and closes below. Upstart, excuse me, slices through, closes below, although it tried to get back above it. This is a position that we got stopped out on today in Grotection. We rode this one up for a wonderful gain. However, change in character, as you can see, slicing through the 21 for the second day in a row, not able to stay above it today. Not the most encouraging action for one of the true market leaders at this point in time, or prior to this sell-off over the last couple of weeks here. Tesla and Netflix, two of the biggest or the strongest of the big names. You can see a nasty reversal here on Tesla, ended up only up about 0.75% after being up closer to 4% at one point today. That's not a great response. And this was something I came in today very conscious of, as they were up pre-market on some good delivery numbers. And I thought if Tesla could hold their move and close above 800, that was a positive for the market and maybe for growth stocks. Or if it did something like this, that could be a negative. So on the bright side, it didn't go red, but on the bad side of things, it finished at the very bottom of the range. Netflix also at this point looking like a failed breakout, although it did get back above the 8-day here and finished relatively well. This is not the action you want to see. Ran up to 626, got above the 615 high, got above this high here, and reversed harshly lower, actually undercut the 8, like I said, reclaimed it. So Tesla and Netflix still okay for the time being, but I would be careful with the action you saw today. Not the most encouraging for what were two of the strongest stocks in the market. Now let's get off of some of these leaders, these last standing leaders that are acting well. Let's look at some of the strongest stocks here. LNG, I've covered this one a few times on the podcast and the videos. Strong breakout. It's a monthly breakout as well, as you can see, going all the way back to 2014. Very nice volume today. As you can see, almost about 90% above average, or excuse me, 124%, just needed to update there. Getting through that century mark as well, pretty big level for stocks to get through. So you love to see that with volume. And you can see the volume here. This thing's been up a lot. Be very cautious with it at this point. A few more here, and these are going to be similar story. Matador having a nice day, continuing higher, as you can see, on higher volume. And Fang also acting very well, breaking out and getting through that 100 level, getting through this 102 high, 102.53. So the oil and gas exploration, certainly one of the strongest sectors in the market. You can see ranked number 3 out of 197. So very, very strong. And a lot of that strength has come in the last week and a half or two. A few more here. SIVB, Silicon Valley Bank. I've touched on this one. Just hovering above the 8-day here, getting a little bit of a nice consolidation up here, I guess, for about the last week. It's the 21 EMA starting to catch up as well. So this is one of my favorites in the bank space. Additionally, WAL, I've covered both of these. This is not the greatest candle today for WAL, but it is still above the 8-day exponential moving average. And you know, when the market is really doing poor, sometimes there's nowhere to hide. And by no means are these stocks in bad shape, but banks and oils have been the things that were acting well when the market was not, and today some of these banks pulling back a little bit. SI, however, not pulling back at all. This is the crypto bank. You can see this breakout over these highs right here with some volume and continuation today. This one was actually down a couple of percent, ended up being up 10% at one point, closed the day up 6%, but acting very strong. However, keep in mind this is a bank that's got heavy ties to crypto. Few more here. NTR, I covered this one as well on the podcast. This group is acting very strong, as you can see, breaking out here. CF, another name, just slightly down today, but nothing wrong with that chart either. And lastly, MOS also breaking out today, getting above that 38.23 high, as you can see, with some volume. So really, these are the strongest areas of the market, the three I just showed you, the XOP or LNG Matador Fang area, the KRE or SIVB WAL area, and then this chemical agriculture space. These three stocks in particular, NTR, CF, and MOS, acting very well. And then lastly, we do have, cryptocurrency having a nice day. Continued strength here in Bitcoin, actually showing some pretty significant, you can see this really sharp move up in RS. Very significant relative strength compared to the market, specifically compared to the NASDAQ. So Bitcoin acting uncorrelated for the time being. So now I want to talk about this divergence, and then I'm going to highlight something else in relation to what I'm going to talk about here. But I'm going to pull up a comparison chart for you guys, and we're going to look at IWO. Well, first, let me get off of Bitcoin for you. So we're going to go to IWO. This is the Russell 2000 Growth ETF. We're going to pop this on year to date, apply, and we're going to look at IWN. And this may, let me see if I can expand this for you and make it a little bit easier to see. There we go. So you can see these were moving in lockstep more or less up until the February crash in growth stocks, and at that point oil and banks were acting very well. So you see this massive divergence here on IWN and IWO. However, after that point, you begin to see a little bit more of acting normal. You see you're trending down here, just gets a little bit more correlated. And then what have we seen over the last 2 or 3 weeks? Pretty much moves in the opposite direction, right? Starting here, there is some divergence. This is going higher, this is going lower. So IWN obviously up significantly more than IWO on the year, and we're seeing that I guess divergence in strength with IWN being stronger start to pick up over the last couple of weeks, and that's evidence when you look at the chart. You see IWO here below all the moving averages. However, IWN is not. It's above all the moving averages. Same goes for MDYV, the mid cap value, slightly above all the moving averages. So that's part of the reason we did not change the medium term on the trend gauge to bearish, because there are some specific areas of the market, particularly small and mid value, that are acting well and above all of those moving averages. I showed you those strongest areas. That these are reflective of those areas: banks, oils, etc. So very important divergence. Keep your eye on it. You want to monitor does value continue to outperform growth, or when does that divergence start to switch back around and maybe we see growth gain some ground on value. But for the time being, value is in favor, and value means banks, oils, they're more defensive plays, which tends to be the case when the market is a little bit scared and panicky, which seems to be where we're at right now. A few more laggards. We trimmed further on NVIDIA and Apple. These are very small positions that are actually offset with the hedge at the current juncture. Both of these just getting sold off hard. There's really nowhere to hide in big tech land at the moment. I mentioned Netflix and Tesla being the last two, but pretty much everything else getting hammered. And I'll show you some of those here. Facebook down 5% or so today as well. Square also down another 5% or so today. PayPal down around 3 to 4% today. So like I said, nowhere to hide in big tech, with the exception of Tesla and Netflix, and those may be showing some signs that aren't the greatest today. The two areas that absolutely got crushed and dragged the Qs today, as just particularly dragged on growth, is semiconductors and software. Both of these having really, really bad down days. So you see the SOX ETF down 3%. IGV, the software ETF, also down 3%. So these two areas really, really getting hard. And then this maybe tells the best story of what's happened over the last few weeks. It looked like these higher beta, the G5 index type of names were really getting ready to go. As you can see here, it looked that way up until about the 24th. And we have since come down from 52 all the way to 45 in a matter of about 6, 7, 8 trading days here on FFTY. So a pretty brutal reversal. You know, this was looking good and quickly started looking very bad, which has kind of been the story of the year. Very, very sharp moves down, particularly in growth stocks. And just a few more to further emphasize this point. In mode down 13% today. BILL, this had been one of the ones that was acting better, down 6% today. If you look, you know, at growth stocks, you look at the holdings of ARKK, for example, you can throw a dart, and most of those names were down anywhere from 3 to 6%, if not more today. So growth stocks taking it on the chin, value acting well, and that's your oils, your banks, and that chemical agriculture group acting okay. But most everything else not acting well. The indices not necessarily looking healthy at the moment. So that's the information that's presented. We see leading stocks start to crack, start to falter, start to slice through those moving averages. We take that in and we make decisions in accordance with that. So I hope this information was valuable to you guys. Hope you enjoyed the video, and I will see you all on next Thursday's video. Have a great week, everybody.